Good morning, everyone. It's Chris from Soul Society R as well as Axel. Happy Father's Day to all. You can find us on X, Instagram, Discord. You can DM me on either on X or Discord. Remember, this video is for the overall coming week in this market. Subscribe, it's for free. Remember, we're not a broker dealer. Past performance doesn't give us any indication of our future results. Let's go to the first slide that I have up here. Happy Father's Day to all from all of us once again. Let's take a look at the SPY, which is the Fortune 500 company electronically traded fund. And you can see I have put in the 6-hour charts on the S&P 500. And I said, let's use this for illustration use only. And I took a 3 weeks range, and I noticed that from the week before, last week was an inside range. We looked up and came back into that range. And the prior week, the last 2 weeks, we were range bound. We broke up, looked above, and failed back inside that range. But we are paying attention to the $998.31. If not, you pay attention to the $985 range and 23 cents in case we end up losing this area in the 582. So I am not trading what most people think. We trade what we see on the charts and technicals. Remember, the global markets have a little bit of wind behind it due to Israel and Iran war. I mean, the Ukraine war, not many people talking about it now. They shifted to the Middle East. So let's pay attention to that, what's going on in the overall global market. Let's go to the next slide that I have up here. And what I wanted to tell you, just remember to check us out on YouTube and give us your commentary. Let us know what we can do to help you out. Let's go to the first slide that I have up here, and I put it on X, so you can find my handle at Chrissy Farah. I put key events that's going to be happening in the overall market. I use the electronically traded fund as well as the Dow Jones Industrial Average, small cap, and the Nasdaq. Here I put versus the dollar, the VIX, which is the fear and greed gauge, with the electronically traded fund IEF, or you can use BSV, which is the Vanguard short-term treasury bills, 5 to 10 year. Happy Father's Day. Remember, on Monday we have a couple of announcements, which is the manufacturing survey, U.S. Treasury on Tuesday. Wednesday, a little bit heavy. Job claims, Fed policy decision on interest rates, and the FOMC, Jay Powell will be talking on the box that day. Other than that, we have on Thursday the June 10th day, so the stock closed, and Philly Fed manufacturing on Friday. I hope this will help you. Pay attention to the overall market, and we'll see what happens in that week. And you can see I put this slide up on X. So let's get rid of this and let's go to the first S&P 500. I put the E-mini Nasdaq 100, the S&P, the Dow, as well as I did not include here the Russell. And then what I did, I put the February highs to the low of March 2023, the highs of 2022, the 2022 highs and lows, the reset and continuation higher. We had to reverse back down to this area. What I want to do is show you how to do this manually. I'm going to use a linear regression uptrend channel from this low to this high. You can see if I connect them, they basically touch each other. We are in a linear uptrend channel. I can duplicate this and basically duplicate the drawing. And what I can do is put a linear regression uptrend channel right in that range of these two. So this is your 50%, this is your low, the zero line, and 100% up. We had an inverted hammer on the monthly, but we still positive compared to the prior month range. After that May push up, we still in consolidation, but we are in that uptrend channel. Does not mean that we have to continue, does not mean we have to go back down, but we are holding the 18 simple moving average. You can see we're starting to lose a little bit momentum, but we are gaining a little bit back up in the overall market. So this is important to pay attention to the global markets in relationship to what the Fed policy does on Wednesday. So if I go from the weekly to the weekly chart, I just want to bring it in and show you even. Let's go back to what I had before, because I want to show you how to do this a little bit on customs. We're going to go to 2019, and we're going to go on the weekly chart like I had it before. And what I wanted to show you, even if I draw the highs and lows for the year from this area to this area, wanted to show that it is duplicated. I will show you how to do this to duplicate it. You can see that the extension was 150 to the upside and the downside. Even if I remove this and I redo it again from highs to lows in 2022, you can see that extension was 200% back up. So if I remove this, what I want to do is take a look at the 2025 range and the 2024 in relation. If I take the highs from this year to the lows of 2024, you can see where it was in relationship. We retraced 100% of that move, but rallied back up, and we bounced off basically almost that linear regression uptrend channel, but we missed the 200. We regained the 116 simple moving average, the 5 and 18 crossed, and we went back to bullish cross from being bearish cross, because you can see when it crossed up here, the 5 and 18 became bearish cross. When it crossed back up, it became a bullish crop, but we are in consolidation on the weekly charts, looking at the retracements of those Fibonacci's or the measured moves. Let's go to the daily chart here. And what I wanted to do on the daily chart, show you that we are in consolidation. If I take the highs of this double top here in February, March, the reset, that was the basically the tariff news came back down. We called the 5,145 and the S&P, but I still using the combo. We regained it and we pushed higher, but we've been in consolidation. If I zoom in this area for the year, we are in consolidation going back and forth. We looked above and failed. So I was paying attention to this candle, if we can clear it in order to get back to this one where we fell from, but we haven't been able to. And Friday was a sell-off to the backside of the channel. We lost the 18 SMA. We closed a little bit under it, but we have the 200, 116, and the 250 and the 50 SMA here. This was the bullish cross basically to tell you go wrong, but usually this area here would gave us a nice run up, but we are in consolidation due to the global overall market and the turmoils in the Middle East regard, plus the tariff has not been settled with China and US yet. It's just being postponed and they're negotiating what they can do with it. So if I take a look at it on the S&P 500, which is the E-mini, I'm going to use the micro ES. Oops. Micro ES, and what I'm going to do is basically, you can see where we called the 51.45. I just wanted to go back and show you that this was a nice buy, rally back up here, clear the the tariff noise up here, retest this area, bounce back up and continue, came back in, retested that breakout, rallied higher, but now we are in consult. And I put these in the prior week's video, and I said pay attention to that linear regression uptrend channel, this area here and up here, if there's going to be continuation to the upside or downside. We basically retested this area. Now I can move this oval if I activate it. And what I want to do is basically put it on the 116 SMA and the 250 retracements of that measured move, because if I take the highs and lows of that support and resistance, the 38.2 is here, but the 23.8 meets basically where the 116 and the 200 meet and the 250. That would be a good area to pay attention to. Activate it a little bit, drop it a little bit lower, so it coincides, these two was the same level. So most important is to pay attention to that level in the S&P 500. I'm going to show you the Nasdaq 100, the micro ES, and we'll use the QQQ. Oops, we're going to use the the QQQ to do the measured moves, micro NQ. And we can see that there was consolidation looking up on a grinding basis, and we came back, retested the 18 and bounced off on it on Friday, but I am paying attention to that noise in the market in case there's going to be continuation or we end up in this area or in the upper level and clear this area here and here from the prior year and this year's high, which happened in February 19th. Let's take a look at now the micro ES. Micro ES, I'm going back to going to do in the ES, use the measured tools as well as the Nasdaq. We're going to go to an intraday basis. What I'm going to do intraday, we're going to use a 15-day range, and we're going to use a 4 or 6 hour. It doesn't matter which way we use it. It's basically giving us an overall view. I'm not going to measure the distance from here to here all the way up and down. What I'm going to do is look at the weekly last year from Sunday through Friday, the measured distance, we're going to take the highs and the lows and measure it. And if I extend it to the left, usually the 150 or the minus 80 to minus 100 on the extensions edit the property. And I'm going to bring it back all the way basically to 531. Okay, everyone, 5. We're going to use 30. How about that? So we get the extensions where we are coming back to in case we end up getting back to this area if we fall through, because we are in an uptrend, but you can see this uptrend here. If I draw a linear regression uptrend channel, I want everyone to pay attention to it. This will give you an overall view where that linear regression uptrend channel support and resistance are on that chart. You can see we are in uptrend, and if I do it backwards, we are in a linear regression symmetrical triangle downtrend channel as well as an uptrend channel. If I do end up failing here, I'm looking for the backside of this in a 200 SMA to catch the first bounce. If we end up breaking and continuing, I will look for the 100% retracement of this area where the breakout was. Or vice versa, if I break out of here to the upside and I clear this channel, I would look for the 115, eventually the 180, 200 to the upside. Remember, we're not biased. We're going to trade what we see on the charts. Let's do the NASDAQ, which is the QQQ. And I wanted to do this on the QQQ to show you that the linear regression uptrend channel, you can see I had this one up here pointed out. We're going to remove this. We're going to retest this area and draw a channel, uptrend channel in here to the upside. And you can see that this one is, the trend is upwards. And if I do it backwards, you can see the machine did it by itself, the control points. Usually the pivots or signal alerts, you can see I duplicated this area to the upside. You can see we never got it, removed the drawing. That was the prior week's range. I did it in the group, so we can take this week's range from here to here, and we can do the same thing on the duplication so everyone can understand what we are looking for. So I can duplicate this to the downside, duplicate the drawing, and what you do is drag this one down to here, and vice versa to the upside. We can duplicate this and draw it to the upside. So we're going to trade what we see, not what we think. And most importantly, understanding these levels. Remember, I'm averaging these out to show you where the extensions can be to the upside or the downside with no bias. I hope this video was very helpful. You can see that the linear regression and the RSI or the MACD trying to cross over and came back to retest this area and fell down on Friday on the 4-hour chart. So usually we use supply and demand zones and control points or signals in order to keep us in line. And if I do this and then convert this to monkey bars, if I do this on a monkey bar basis, and what I wanted to show you that this range we broke out, we had a virgin control point down here, we retested it. So this is a VPOC. Usually the VPOCs, I mark them with the profile with a line like this, so that way we know where it is. This is a VPOC that's never been tested. Usually you mark these areas for the VPOCs where they never been tested. Like these ones were overlapping to up, but the time spent, you can see here was lower, here was neutral, here the time spent was equivalent. We had the time spent lower from highs to lows. So the sentiment is supposed to be lower, but if we retest the time spent down here where it was lower, we grind it higher. So the most important thing is to pay attention to these virgin control points on the charts. If we get a breakout or a breakdown, like this one was a virgin control point, which is a POC, was never retested. You can see here the time spent and the VPOC was tested, so no longer valid. So what I'm doing here is basically showing you how to mark the levels that are virgin control points, value high, value low on the profile. Let's just do this in here. We can zoom it in. That's the value high, value low on the profile, and most contracts are value high, value low, point of control where most volume is. But the time spent is the time spent is up here and the time spent is down here. And here in relationship, if I take the highs and lows here and I do the measurements for the daily chart or for the Fibonacci, if I take the highs and lows for the QQQ, I can see that the sentiment and the time spent was lower. So my 50% should take the market lower to the extensions to the low side, and I would look for the opposite side if things are happening in the overall market, the sentiment is lower. But if the sentiment is high, you can see where the extensions are. These are duplications to the upside as well as the downside with no bias. And at least you have a level to consider when you are trading the overall market. Let's go back now from the style. We go back, we put the drawing back to normal. I'm going to remove this Fibonacci. I put these QQQ VPOCs, remove the drawing, and you can see where those VPOCs are. You keep them on your charts until they are no longer valid. When they are crossed, no longer valid. That's a virgin. That's the Fridays. And we do have one lower down here. So we're going to trade what we see, not what we think. Let's go now from here to the back of the charts. And what I wanted to do in here, just go back over the S&P 500 or SPY like we did in the profile. And I wanted to show you on the short term that the open, the high and low, usually in the pivot, you market in relationship to the short term down, midterm down, long term still up. But the overall Mega 7, which is the NASDAQ 100, I have Apple, which was bearish, Amazon was bearish, Google, which is the alphabet, Google, and Google was under, Facebook was under pressure, Microsoft was a little bit, Netflix was down, NVIDIA was pressure, and the Tesla was positive on Friday. It rallied higher. So this is the Mega 7, including Netflix in it. I included that in the charts. In the S&P 500, we have the energy, consumer discretionary, financial, utilities, material, consumer staples, technology, real estate, industrial, healthcare, and telecommunication. All the S&P sector was down except the energy, which is XLE. So if I take a look at now gold micro GC or GLD. I wanted to show this on the weekly chart to show everybody, hey, on the weekly chart, we had last year's range from low to high and the breakout at 2600. We had called the 2260 for the long here. We got the double extension almost to 180%. Now, if there's going to be in the global market a little bit of turbulence, pay attention to gold for a breakout to the backside of this channel. If not, we'll retrace to the 18 in the backside of this channel for opportunity to buy if you did not enter gold. So, or you can look at the GL and I will finish it with this video. See, these are the charts where you got the breakout, the rally, the reset, retested at $230, $238 rally, and the breakout at the 260 area, push up. Now we are in consolidation, creating that U shape. If there's going to be a cup here in continuation to the upside or breakout to the backside of this channel, if not, you pay attention to the 18 SMA and the consolidation of the backside on GLD. Let's go back to micro GC, micro ES, sorry. And you can see the levels that I put on the charts in relationship to the R. And I put these channels in here. So we're going to take him out. So no longer valid. So we can keep the chart nice and clean. So we can remove this area here. We can remove that little line downtrend channel, and we can remove this uptrend channel. You can see that the computer did grab that area and gave you those channel and the retracements of the Fibonacci's to the upside or downside or the measured move. So we're going to trade what we see, not what we think. And I hope this video was helpful. If you have questions, please get in contact with us. We're here to help at Solstice ATR, or get in contact on the phone number, which is down here, the 949-414-8484, or get in contact with us at Axel. Take care.